Imagine this: oil on the boil, stock markets in free fall, inflation back with a vengeance. A direct conflict between the US and Iran could do this overnight. US-Iran tensions are brewing right now. From inflation, oil to the Strait of Hormuz, the world economy could have a major impact. So what happens if the world's most critical energy corridor gets choked? And what exactly has happened between the US and Iran till now? Let's break it down. In late December and early January, protests erupted across Iran over economic troubles, a collapsing currency, and deep political anger. Rights groups reported rising deaths and mass arrests as the government imposed an internal blackout. At the same time, US President Trump warned Tehran against harming demonstrators. Trump said America was weighing strong options, including military steps short of sending troops.
There seem to be some people killed that aren't supposed to be killed. These are violent, if you call them leaders, I don't know if they're leaders or just they rule through violence. But we're looking at it very seriously. The military is looking at it, and we're looking at some very strong options. We'll make a determination.
These signals raised fears that unrest could spill into open conflict. Iran accused foreign powers of fueling the protests and threatened hard punishment for participants. Independent reports counted dozens, even hundreds of deaths in several cities as authorities tightened control. The US voiced support for protesters and hinted at cyber tools to bypass the blackout, escalating the war of words. This backdrop matters. Once military options enter the conversation, even as a warning, the cost of risk rises for oil, shipping, and global finance. So how can a rising US-Iran conflict impact the world economy? Let's have a look. In a shooting war, energy markets panic. Analysts warn Brent could spike past $150, especially if facilities or tankers are hit. That instantly raises fuel costs, power bills, and transportation prices worldwide. The Strait of Hormuz is a narrow waterway that moves about 20% of global oil. If Iran blocks, mines, or harasses shipping here, supply chains seize up. It's the fastest path from a regional war to a global energy crisis. Higher energy costs ripple through everything: food, goods, services. With inflation only just cooling, another spike forces central banks to delay rate cuts or even hike again. Markets hate uncertainty. Expect an initial equity sell-off. Aviation, tourism, and cyclical sectors could be hit hard, while defense stocks may pop. Money rushes to gold and the US dollar, raising import bills for emerging markets and deepening their debt stress. War risk premiums go vertical. Freight rates could jump about 50% as ships divert around danger or pay more for insurance. Delivery times stretch, imported goods get pricier, and retailers pass that pain on to consumers. India and China are massive energy importers. They might face bigger bills and wider trade deficits that can weigh on growth, currency stability, and inflation management if the shock lasts. In a prolonged conflict, expect IMF or World Bank downgrades to global growth. High energy prices act like a tax on growth, increasing recession odds, particularly in Europe and Asia's heavy importers. This isn't theoretical. Recent US strikes on Iran's nuclear sites showed how quickly markets react. Oil jumping, shipping costs rising, nerves frayed, and the Strait of Hormuz in the spotlight. De-escalation at sea, keeping Hormuz open, coordinated strategic oil releases, and diplomatic back channels can calm prices. Without that, the shock spreads from energy to inflation to growth. A US-Iran war wouldn't just redraw geopolitics, it could redraw your monthly budget. At the pump, at the grocery store, on your utility bill. In a global economy wired through one strait and one commodity, what happens in Hormuz doesn't stay in Hormuz. So what's your take on the whole matter? Share your thoughts with us in the comment section below.